Today, we're diving into a new economic proposal stirring headlines and sparking nationwide debate. President Donald Trump is floating the idea of a new income tax cut, positioned as a strategic move to offset the financial pain that rising tariffs might cause American consumers and businesses. On the surface, tax cuts sound great. More money in your pocket, right? But what are the deeper economic implications? Is this a smart balancing act or a short-term political play? Stay tuned, because today we're unpacking what this proposal means, who benefits, who might lose, and how it fits into the bigger economic chessboard of 2025. Tariffs and tensions. First, let's talk about the problem Trump's trying to solve. Over the last year, trade tensions have escalated. New tariffs on Chinese goods. New tariffs on Mexican imports. Tariff threats are looming over European automakers. The goal? Protect American industries. Bring manufacturing home. Punish unfair trading practices. The reality? Tariffs are taxes. And taxes on imports equals higher prices for American businesses and consumers. Everyday goods cost more. Business supply chains get squeezed. Inflation pressures worsen. Economists warn, unchecked, these tariffs could slow economic growth. Enter the proposed tax cut. The proposal. What Trump is suggesting, according to insiders, Trump is proposing a 5% across-the-board cut in federal income taxes. Immediate implementation upon winning re-election. Retroactive to the beginning of the fiscal year. This would mean higher take-home pay for workers. Temporary relief against higher retail prices. A psychological stimulus. Effect boosts consumer confidence. The message is clear. Yes, tariffs might raise prices, but we'll put more money in your wallet to make up for it. Who benefits? Let's get real about who wins with this plan. 1. Middle-class workers. A 5% tax cut could add thousands of dollars back into the pockets of average households. It might help families struggling with rising grocery, gas, and housing costs. 2. Small businesses. Many small business owners pay taxes on their business income through personal returns. A personal income tax cut equals a business stimulus too. 3. Trump's political base. Lower taxes are popular among conservatives, libertarians, and working-class voters. It fits neatly into Trump's America First messaging. Protect jobs, lower taxes, defend sovereignty. Who might lose? But there's no such thing as a free lunch. 1. Federal budget deficit. Cutting income taxes while spending remains high equals bigger deficits. Remember, tariffs bring money into the Treasury. But income tax cuts take money out. Net effect? Likely more borrowing. 2. Inflation risks. More money in consumers' hands could fuel more demand. More demand in a high-cost environment could push inflation higher, not lower. 3. Long-term growth. Economists argue that targeted investments like infrastructure or education often boost growth more than broad tax cuts. A short-term sugar rush might not fix long-term structural problems. 4. Unequal benefits. Critics argue that across-the-board cuts disproportionately favor higher earners. A 5% cut on $50,000 income equals $2,500 saved. A 5% cut on $500,000 income equals $25,000 saved. Trump isn't the first to float this strategy. Reagan in the 1980s. cut taxes while ramping up defense spending. Result: economic boom. But ballooning deficits. Bush in the early 2000s. Cut taxes to stimulate post-recession growth. Mixed results. Temporary boost. Rising deficits. Trump himself in 2017 passed major corporate and individual tax cuts. Boosted GDP short-term, but again, significant deficit expansion. Economists are split on whether the cut taxes to stimulate growth model pays for itself. Most agree it helps in the short run, but risks structural debt over the long run. Political strategy. There's a political genius behind this proposal. 1. Simplified messaging. Tariffs equals protect American jobs. Tax cuts equals protect American wallets. Simple, powerful talking points for the campaign trail. 2. Economic insurance policy. If tariffs slow growth, a tax cut offers a built-in stimulus to keep the economy moving. Helps counter critics who say tariffs hurt more than they help. 3. Wedge issue. Forces political opponents to either support the tax cuts and tacitly support the tariff plan, oppose the tax cuts and risk being painted as anti-working class. It's classic Trump. Turn an economic liability into a populist weapon. But no matter how clever the politics, the economics are tricky. The questions remain. How much revenue would the government lose? Would the tax cut fully offset the price increases from tariffs? Could higher deficits spook bond markets, raising interest rates? Could inflation spiral further out of control? These aren't academic questions. They directly affect mortgage rates, business investment, retirement account returns, healthcare and education funding. It's a high-risk, high-reward gambit. And depending on how global markets respond, it could either spark an economic boom or a painful bust. At the end of the day, Trump's floated income tax cut represents a fascinating strategy. Offset the short-term pain of tariffs with immediate, visible benefits. Appeal to working-class Americans squeezed by inflation. Reframe the economic conversation heading into a bruising election battle. But it's a dangerous tightrope walk. The balance between protecting domestic industries and maintaining healthy economic growth has never been more delicate. As voters, investors, and citizens, we must ask, is the promise of more take-home pay worth the risks of higher debt and possible inflation? Will this strategy secure America's future or mortgage it? Only time and smart leadership will tell. If you found this breakdown helpful, don't forget to like this video, subscribe to Money Blueprint, and share it with someone who needs to understand the deeper story behind the headlines. What do you think? Would you support a new income tax cut to ease the pain of tariffs? Drop your thoughts in the comments. Your voice matters. Until next time, stay informed, stay sharp, and stay ready.